Hey guys, I'm going to show you something pretty amazing in this video. First, we have the yield curve. Every time the yield curve inverts, indicated by this red, that is the start of a sequence of events. The next step is the Fed fund rate flattens off and begins to decrease. That pivot where it begins to decrease is the second step in the sequence of events. The third step is the stock market begins to bottom out and crashes to its ultimate final low. 1, 2, 3. And that repeats in both the year 2000 and 2008 housing crisis, where we had the yield curve invert right here. We had the federal funds rate begin to pivot, begin to decrease the interest rates. And lastly, we had the final leg down, or the biggest portion down, and the collapse to the bottom of the S&P 500. And we are at the beginning. We have the yield curve inversion. We do not yet have the Fed funds pivot, although it has begun slowing down, as we just saw today in the FOMC meeting. And that will be followed, in my estimation, by a major collapse of the S&P 500 down to new lows that we have not seen for a very long time. I think that by the end of next year, we'll probably have the final stages of going flat on the federal funds rate, and a pivot will occur where the first time will actually start to decrease, and the federal funds rate will begin to decrease. And that will take however long that takes, maybe 6 to 12 more months for that. And after that point, we have stage 3, where the S&P 500 begins its steepest descent, its massive collapse into its bottom, whether that's 2100 on the S&P 500 or all the way down to touching these double tops around 1500 on the S&P 500. I think those are our two most likely positions. Now, given that Bitcoin is so heavily correlated to the stock market, and given that Bitcoin was a product of this particular crash in 2009, and that's where Bitcoin was born, and Bitcoin has only experienced a secular bull run this entire 12 years, has just been up, 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 money printing, money printing, money printing, and more money printing, more asset buying, more asset buying, more asset buying. We had one major collapse here with COVID, and that was reflected by a collapse in the Bitcoin price. So if that was any test of the matters, it did not prove itself very well to be very resilient. And so if I believe that Bitcoin is extremely correlated to the stock market, and I believe that the stock market is going to take a major drop down over the next 2 years or so after we have a Fed funds pivot, and that's after we have the current inversion of the yield curve, then I think that Bitcoin has a good chance of going lower than $18,000 where we have it today. I could realistically see Bitcoin hitting 10,000, 8,000, 12,000, somewhere in there. I think that's very possible. And I want to be there scooping up as much Ethereum and Bitcoin as I can, because I think the next cycle is going to be utterly tremendous when the S&P 500 does truly bottom out, and when the Fed finally gets its money printers burring again and pumping and pumping and pumping again. What we're going to see is probably the biggest bull run we've seen in a long time, with more money being pumped into the economy and the economy going vertical, not only in the stock market, but with highly correlated Bitcoin, Ethereum, the cryptocurrencies as well. And I think that we're going to see 6-figure Bitcoin. I think we're going to see 5-figure Ethereum, and that's where I want to be.